Hi and welcome to another edition of our weekly market outlook report. Global equity markets, currency markets and commodity markets are volatile yet again. Recently we had massive Fed QE intervention, which was then followed with yesterday's or overnight's White House and US senators deal. They managed to strike a deal on a massive stimulus package of historic proportion. This is the rescue package worth $2 trillion in spending and tax breaks. Additionally, demand for physical gold is outstripping supply, and volatility in gold is very visible in derivatives, i.e. futures for gold market. Additionally, US dollar volatility is back on the cards as well, triggered initially by that Fed QE package, which is very visible in frequently traded currency pairs like euro dollar, dollar Japanese yen, and sterling dollar. Now, let's take a look at the market. This is the daily chart for gold, and we can see that gold created a massive oversold bounce back and a spike higher over the kind of a longer term view from the past year. We saw a sideways consolidations and a breakout, sideways consolidations, breakout, sideways consolidation, breakout, and so on and so on. And then recently we got exposed to this massive volatility in gold, which corrected severely against the prevailing bullish trend, and came down to this orange line, which is psychologically important 200-day moving average level. And for a couple of days, the gold was actually trading below that level. So there was a massive selling of absolutely anything to raise cash and park money into US dollars. And this was actually very close to a 1500, yet again psychologically important number for gold. Subsequently, over the past 3 trading days, we saw a massive breakouts higher, and the gold managed to regain some of that lost ground, and yet again this was triggered by a lack of ability to get our hands on physical gold, and also the kind of dollar volatility triggered this, which was triggered by Fed QE and also recently mentioned US Senate and White House stimulus package. So what we are looking at the moment is we are seeing an oversold bounce back, and in order for me to provide you with a shorter term view, I would like to go into a 4-hourly time frame and show you how this chart looks. So we saw a massive oversold bounce back out of something that looked like a sideways consolidation, and we were talking about this in our weekly outlook report on Sunday. This was the sequence of lower highs and higher lows. Therefore, there was a coiling price action here. They proceed explosive moves out, and which were triggered by the breakout above 1505, 1516 from a technical point of view. And then the spike higher actually was triggered by reaction to something that was happening from the fundamental point of view, i.e. The stimulus package is introduced. So now, where to from now? I'm looking at this development here, this recent price action, as a sideways consolidation. This can morph into a bull flag. They have the tendency to break to the upside if they're found in a clearly uptrending market, and this is one of them, because the current price from the intraday point of view at least is trading above 20, 50 and also 200 period moving averages. So there is a crossover of 20 and 50 period moving averages, and the price is currently pulling back to retest the previous sequence of the lows and 200 period moving average close to 1600. So if we see a corrective pullback into this support zone around 1600, 1585, and a rally from there, that would likely be perceived to be quite bullish. Alternatively, if we see a consolidation here and a breakout above 1625, a retest of that level from above as a newly found support, that would also open the way for an extension to the upside, targeting additional upside resistances towards 1640, 1660, 1680, possibly even 1700 over a longer period of time. Alternatively, if we see a dip lower and end of day close below 1585, therefore the cluster of these lows and a horizontal support, and that 1585 was a breakout level in the past as well. If we see the daily close below that level, a retest of that level from underneath as a newly found resistance, that would change the bullish outlook, potentially opening the way for a deeper corrective move and additional retests of 1555, 1550 support. Loss of that level could open the way for the retest of 1525, possibly even 1505. But the overall reaction for gold currently favors a bullish scenario. Thank you for watching. Thank you for listening. Stay safe. Happy trading. Bye for now.